let's just start with introductions. Alberto, if we start at this end and work our way down, so just introduction of yourself and the company.
Yeah, I'm an independent broker from Milan, Italy, and I'm a SIOR member. I'm specialized in industrial logistics and cover the north of Italy.
Perfect. Fabian.
Thank you, Richard. My name is Fabian Mullen. I'm a lawyer at DLA Piper. I work in real estate, predominantly real estate transactions. DLA Piper is an international law firm. We're probably the largest real estate group in the world, with more than 500 lawyers working in real estate and 30 of those working in Germany.
Perfect.
Okay, good afternoon, everybody, or is it good evening? I'm Paul Danks. I'm the president of the Society of Industrial and Office Realtors, SIOR, for Europe. SIOR, for those of you who don't know, is a leading professional office and industrial real estate association with 3,400 members across the world, operating out of 42 countries. Here in Europe, we have over 100 members operating out of 20 countries. From a professional point of view, my world has been over the last 35 years plus in global industrial and logistics, advising many global corporates, developers, 3PLs, and so on.
Great. It is on, Renata. Don't worry. It's on.
My name is Renata Osiecka. I'm from Poland. I am founder and managing partner of Aximo Real Estate. We are a local national broker. My personal experience is industrial logistics, which I practiced for 20 years. For SIR, I'm past president of European chapter, and I'm chairing now Diversity and Inclusion Committee.
Great.
Good afternoon. My name is Tobias Schultheis. I'm founder and owner of Blackbird Real Estate, which is based in Königstein near Frankfurt. We have offices in Frankfurt, Munich, and Cologne. Our focus is transaction advisory, mainly for office building, but also sometimes logistics, any kind of use. We're 5 people. I'm an SIR member since April last year, and happy to finally seeing my colleagues in person and not only by video.
Good afternoon. My name is Brian Gaffney. I'm a director of a company called Murphy Mulhall, based in Dublin. We specialise in investment, sales and acquisitions across all asset types, and we're also active in the office and industrial markets, both in acquisitions and mostly on a tenant advisory basis.
Great. Let's start with you, Brian, since you've got the microphone there. I suppose, give us your sense of, for those who don't know the market as well as you, give us your sense of, I suppose, what you've seen over the last 12 months and where we are now.
The market has been very resilient. I think even taking, say, just this year, obviously Q1 in Ireland, there was still a lot of restrictions with COVID in terms of local restrictions. Obviously that impacted on international travel and obviously travel domestically as well. So that had a big impact on the transactional side of the market. Q2, that opened up and I suppose it allowed international travel back into the country. Ireland is probably 50% of the investment market in Ireland is 55% is through overseas international investors. So it's very important, obviously, that travel could resume. And we've seen a very busy Q3, and we're looking like a record investment turnover in the market of about 4.5 to 5 billion this year. So the market has been very, very strong across all asset classes. Residential investment, PRS, build to rent, has been hugely popular in Ireland, and it's only really a new asset class. It caters for about 50% of all investment turnover. That caters it predominantly for Irish investors, but also a lot of overseas investors. Germany have a huge number of investors in that field. Logistics has been very strong, and core office has been very strong as well over the last quarter, 2 quarters. And it looks like there's a lot of deals we know of that are in legals and are due to sign. So looks to be a very positive end to 2021, and the outlook for 2022 is very positive. The market fundamentals have been very strong. In the office market, the return to office take-up has been very strong in the last 2 quarters. There's yield compression across all sectors, which is normally a good sign. So we're very positive for the Irish market. The fundamentals, as I said, are very good, and we predict obviously a record turnover this year, and I think that should be followed through next year as well.
Okay, good, interesting. Renata, let's just come to you in terms of Poland and broadly in CEE, if you want to pick that up as well. So I guess same to you, which is what have you seen and what are you seeing now? Where do you think we are in the market now?
I mean, due to COVID, obviously, there are different habits in purchasing goods. So e-commerce is a huge trigger on the development of logistic market. So we have like 2 factors, which is e-commerce and then nearshoring. So many companies from China is coming to the market as occupiers. So in terms of the letting market, it's really booming, and also supply is very healthy. So this year we have under construction nearly 4 million square meters, where similarly the take-up is nearly at the same level. So there is a shift in the market towards landlords market. The vacancy very low. So I would say very dynamic situation in logistic market, where other asset classes are, let's say, less dynamic. So residential and logistic is very strong currently. In terms of the investment market, yield compression as well, and it's, I would say, daily yield compression nearly. So coming here, I was going to say that for prime big box logistic, we should expect 5 plus. Yesterday was announced that there was a break record broken at 4.1 for a similar type of product. Obviously, this we are talking about prime Warsaw area, and for value add, we can expect 6.5% yield on logistic asset class. So I observed that the first half of the year was slower because of lockdown and the limitation with traveling. But nowadays it's very active, and as we see here, many people are coming back and investors are coming back, as there are all mainly international investors in Poland. So we expect a very good year.
Okay, good. I'll come back on a couple of things around the Polish market in a minute if I can. And Alberto, what about Italy?
The sentiment, I think, is overall Europe is positive. What I have to witness to Italy is we usually have the 2 big column, office and retail, and today we have a wide numbers of options. Logistics good, residential good, but it's also emerging things that no one expected. As now we're talking about parking, logistics parking, hotels back, hotel 3-star, 5 stars. The numbers of options for real estate investors is huge compared to the past. And that's a fact for liquidity, and that's a fact because the 2 secure asset class, which is offer a retail, will make a step back and permit the others to come. And we experiment a time where we have experiment, because we have too creative, but it's the market is very wide in different options, and liquidity is trying to enter to cover all that option. Then we was able to present them.
Okay, good. And Paul, I guess, Brian's covered the Irish market there. Do you want to pick up the UK market to a certain degree and what you're seeing there as well?
Yeah, I think to pick up on Renata's point, that the UK market is equally very dynamic. If we exclude retail, of course, which is suffering right the way across the world, what we've seen and we've seen this obviously right the way across Europe, is the very dynamic logistics marketplace. Part of the challenge that many of you know that we will have in the UK is the lack of availability of land. So we're severely constrained, and particularly the planning system, getting approvals for new development in the UK is subject to continual challenge and basically government meddling of changing of policies, almost it seems on a whim, which is further exasperating some of the supply issues, bringing supply forward. The office market, clearly one of the very dominant markets, the dominant market in the UK is the London marketplace. And really at the start of the pandemic, obviously nobody knew quite what was going to happen in terms of how long it was going to go on for, when the return to work was going to take place, how businesses were going to adapt to the changes within the marketplace. And there was lots of predictions that maybe the central London market would collapse, rents would decline significantly. We've certainly not seen that. We've certainly seen some easing back on rental levels, but we've equally seen, back to the point on dynamic markets, we've equally seen some very, very quick adaptation into the realms, obviously, of hybrid working, which we've seen all the way across Europe, which actually has held up demand for office accommodation quite strongly. Albeit that the size of the office takes, if anybody was looking at moving, there were several examples whereby it's gone down from, say, 100,000 square foot requirement to 60,000 square foot requirement. But within that 60,000 square foot requirement, you're seeing totally new ideas come forward, new innovations coming forward on office design and office layout and so on. So that all points to the fact that, even with a so-called downturn, there's a lot of activity in the marketplace.
Okay, good. And Tobias, from your side, German market, what's your kind of view on that?
Well, Germany is considered a safe haven since, I would say, at least the last 5 to 6 years. And bringing a lot of international capital into Germany, forcing competition with domestic buyers. And I think over the last 12, 18 months, a lot of German buyers were happy that we had the travel ban or the travel restrictions, because this kicked out more than 50% of competition. But we still had a very strong investment market, basically over all types of uses in Germany. And also, last year, when we started with the contact ban in March, on the very first day of the contact ban, I received a bid for property in Frankfurt, led to the city of Frankfurt. So it was what we call flavor of the month. But I thought that the bid that came in on the first day of the contact ban will only go down. So, because of the pandemic, but the opposite was the case, because there was a competition between 5 German bidders, and the price went up more than 5% from an already very high level. So that we have seen a strong market, and the outlook is the same thing. The only problem is we don't have enough product. Whenever you have interesting property, you can choose from 1 or 2 handful of possible buyers, which is good for those brokers who have something to sell. But we're in the same boat with investors. There's not enough product. That's our biggest challenge. In terms of the letting market, I think it's similar what Brian and Paul said about office. We had a dip last year, but not that much. And especially when you look compared with the 5-year or 10-year average, then it still has been a good year in Germany last year. But I think that there will be changes in Germany, which will reduce to 10 to 20%, depends on which broker report you choose, that we will need 10 to 20% less of office space. But also there, as the outlook for the German real estate market in general, thumbs up.
Positive. Okay, great. Because obviously we are in Munich and in Germany, you've got the home advantage, which means you're allowed 2 speakers on Germany. So Fabian, obviously based here. What's your sense of the markets? You're seeing it from a slightly different perspective, obviously, from Tobias. So it'd be interesting to get your take on the German markets and more broadly if you want to, but let's start with Germany.
Thank you, Richard. So, Tobias, I have to admit I'm not very surprised about your assessment, as I have yet to find a broker who tells me there's enough product in the market. I've known you for 10 years and I never heard you saying that there is enough product. So this clearly hasn't changed. I do see the difference.
The secret is in the market.
Yeah. Here's my perspective on things. So I'm just a real estate lawyer and obviously not as savvy as most of the brokers here. But I do see the deals I'm advising on, and our financial year starts in May and ends at the end of April. So if I look at these 12 months during the pandemic, we as a team of 5 real estate partners in Germany advised on approximately 120 deals. That's a huge number, which is higher than previous years, and this number alone shows that there is product in the market. So there is a significant turnaround. If I look at, and I know these numbers quite well because every year we hand in our submissions for the legal directories. There's Legal 500, there's chambers, and they want to see a list of the deals. And obviously some of them may be disclosed publicly, others may not, but we have this list. If I look at this list, I must say a large proportion of the deals are logistics deals. And if I say logistics, then possibly 2 or 3 years ago, we had one category of logistics, and now it's changed a bit, like you said, basically. So we have the large big box logistics, we have the granular small warehouses, we have a huge sale and leaseback corporate logistics segment. We have the new class of urban logistics coming up, which is basically last mile logistics, which a lot of players in the markets, our clients like My Way, like M7, like Carlisle, they started building funds. And these are actually the products which weren't sought for in the market some years ago. So this is definitely a trend I see up and coming in the last years, and which was catalyzed during the pandemic. So if I say of these 120 deals, half of them were in the wider logistics, light industrial category. We had 0 hotels, not surprisingly, so hospitality and leisure market was strongly affected. We had a significant number of office deals, and which was also continuously increasing throughout the year. What we have not seen were bigger lettings, so you could really tell that the tenants in the market, they observed the situation, they were busy with bringing their people to the home office and now back to the office, and I think this is also picking up. But overall, my perception is it's been a really good year for real estate investments in Germany so far, and the trend clearly shows in that direction.
Okay, interesting. I wanted to pick up with you, Renata, just a little bit in terms of the logistics side there in Poland, because obviously Amazon.pl launched relatively recently anyway. Is that going to drive more of the market in Poland and across CEE? And I'll also it'll be interesting to pick up to see whether or not there'll be a boost also for Germany within that. But what's your kind of sense of that?
I mean, actually, Amazon opened sale for domestic market only half a year ago. But so far, Amazon have 12 centers in Poland already. So it shows the scale which is being operated from Poland. Majority of the product is shipped to Germany and to Western European countries. So I think they're going further and further toward east side of Poland in terms of the distribution and new hubs. So obviously Amazon is the kind of a trendsetter in the industry, and we observe many newcomers, and Chinese operators are following the trend as well. Obviously not the same scale, not the same speed, but e-commerce is, as I mentioned previously, is the trigger for the development for the newcomers, 3PLs, for courier companies, for packaging, and this growth has enormous input on the industry.
Okay, good. And Brian, and I'll be interested to get your view on this, Paul, as well, is obviously in the UK, there's a lot of focus at the moment on issues with supply chains and various other things. As kind of one half of the island of Ireland, or more than one half, in fact, but how do you see it? Has there been any change in terms of the focus on investment in that area related to Brexit or not? Has there been any impact or any influence at all from it?
Yeah, the industrial market in Ireland is quite small. I suppose it's logistics investments is becoming a lot more popular in the last 2-3 years. There's only really, I would say, 4 to 5 developers, all Irish. There's no international developers building stock in say Dublin and the wider area. But there's a huge number of requirements for space, and the vacancy rates are pretty much at zero. There's no available space. We have a couple of requirements at the moment, and to try and fill those requirements, it's all design and build. So you're talking about a 12 to 18 month wait to get sufficient stock that's modern and sufficient for all these predominantly 3PL and retail, online retail operators. The adapted market just isn't there, but there's a huge demand, and that has a kick-on effect on the investment. The industrial investment market has been very, very strong, albeit it's quite small. It's performed very well. I'd say 12 months ago, prime yields were probably at about 4.75% net initial. I think there's a couple of deals ongoing. We're involved in one, and I think by the end of the year there'll probably be a deal done close to 4%. So that's 75 basis points of a change within 12 months. This goes to show the amount of money chasing that. But obviously, as rents, the shortage of supply is having an increase, is obviously increasing rents, and that's obviously pushing on capital values, and occupiers are now signing up to longer leases, which in turn is driving on the investment values of all these sheds. But it's a small market, but a huge amount of interest in it, both nationally and from international funds.
Okay, interesting.
Yeah.
And Paul, do you want to? I mean, obviously, probably everybody, wherever they are in Europe, will have seen the news, I would imagine, about HGV drivers, supply chains. But I mean, there have been changes in the supply chains. What's your sense of that? Has that led to a kind of nearshoring, shortening of those chains? Is it a challenge that will be removed from the market? It's just a question of time. What's your sense of that?
I think, Richard, the overall answer, to answer the question, and I'll explain why, yes, it is a question of time. I think what we have seen recently is almost a perfect storm. We've seen the world coming out of the pandemic and the restrictions that placed upon global supply chains. But we've also seen coming to a head issues that we knew were lurking there in the background. So, for example, energy, climate change, sustainability. It's no surprise that as we make the transition towards greener, more sustainable buildings, environments, and so on, that there are going to be problems along the way. What you've seen in the UK recently, and you'll have read it right the way across Europe, is queues at petrol stations and so on because there's no supply, not enough supply of HGV drivers. What's not been reported, and it was only in fact reported this weekend, that part of what was causing the problem, in fact the substantive factor that was causing the problem in the UK, was the switch to the more environmentally friendly petrol, which is called E10. So consequently, during the summer months, when the tanks at the petrol stations would normally have been full, all of the operators have been running down their storage capacity to something like 20% of what their normal stock would be because they wanted to stock up with the new petrol. And of course, suddenly, press comment, no HGV drivers, everybody goes to the petrol stations to fill up their cars and panic. But once the petrol tanks get filled up, which they will, the panic disappears. And you saw it again earlier this year when the Suez Canal was blocked, and that caused the issues that caused, and it caused disruption right away across the world. And I have to say, I tend to look at it, not to pretend that these problems are not there, but you just have to take into account that some of this is actually ripples along a pond. And eventually, as demand and supply balances out, we will get back to some form of whatever you might call normality. But the normality that we are going to see in the future, and it's going to be interesting to see what comes out of the COP26 conference, starts later this month into the first 2 weeks of November, and what global leaders coming into Glasgow come out with, and how those sort of factors and the pronouncements that globally politicians are making are going to impact upon markets. And over the next decade, we're going to see some profound effects upon markets. But markets adapt to change. That's what, back to my comment about dynamic markets. Markets adapt, but it takes time. It takes time.
And I'm definitely going to pick up that ESG sustainability point, because we'll also be in Glasgow for COP26, running a couple of events there, which will be interesting to see. But there's huge changes already happening, I think, when you look at the pension fund sides. So, for example, the Glasgow City employees' pensions moving away from anything related to fossil fuels in preparation for these things. So there's a lot of those trends going on, which will be interesting to see. Alberto, it's certainly in our news lines, I don't think I've ever seen as much about Milan as I've seen over the last 5-6 months in terms of new projects, new urban areas being created, renewals, renewal of areas, fresh projects, all of those things. I suppose, what's driving that at the moment? Is there suddenly a newfound energy in the Italian real estate market?
Milan is the economical capital of Italy. We experiment in the last 2-3 years a massive office development. Now there is a gain to bed positions, much more downtown for last mile distribution. In general, people say the city is back when we finally had, near a month ago, a design fair. So the so-called Fiera del Design, which is a global event in which Milan have the leadership. And the thing is going profoundly well. So Milan is back. Of course, you have to manage with all the cities, the post-pandemic. But the cities still attract, and there is a difference also in pricing. If you curve the residential curve from Milan is here, the rest of the nation is quite flat. So Milan's make the difference.
Okay, good. It's just been really interesting to note how much of a change there's been in the buoyancy in the market, certainly from what we've seen coming through on our news lines. And it'd be interesting to get from you as well, Tobias, just your sense of, because we've looked a lot at the logistics side, are you seeing most of the capital targeting that area? Obviously, residential and logistics have been some of the key areas that have come out of the crisis. But do you expect to see that continuing in terms of the focus of capital on the logistics area? And you mentioned the limit of product, and for sure that's going to make that more difficult if we get more capital chasing even less product. So how do you see that kind of coming out in the end?
Generally speaking, I'm sure that international capital will remain strong for the German investment market. Definitely the logistics sector is very appealing to international investors. On the one side, we are the safe haven, which is already mentioned, but also logistics is the new office building for investors. 10 years ago, 20 years ago, nobody wanted to have this type of real estate. Now it's one of the most sought after types of use. And when you look at the yield level for logistics, in some cases we are below 3%. So this shows how high the competition is, how high the interest is in this type of use. And I'm sure the Amazons and co, they will do their best in order to keep this sector an interesting one for investors.
Okay, great. And Fabian, I wanted to pick up a little bit with you, and then everybody else please come in on this. But On that sustainability, ESG side, we've mentioned it there, and it's been mentioned hugely in pretty much every single session that we've had, whereas, probably 5-6 years ago, everybody was talking about financing. That was the sort of key thing that took up large chunks of each of the sessions. Actually, sustainability, carbon neutrality, but also, the social impact side of things have been coming through much more strongly. Do you see that increasingly being driven by regulation, obviously, from your side, from the EU side? Feel free to discuss that in terms of Germany, but also wider Europe if you wish to. But what's your sense of that in terms of as an important thing for the market going forward?
Thank you. Yeah, I mean, you've mentioned it. There are certainly regulatory aspects which obviously give this topic a push in the market. But I think what we need to do is look back a bit, possibly 20 years. And look in the history of real estate investments where sustainability did have a place, but then suddenly disappeared again. So I recall from my beginning as a lawyer, and I think it was 2006, this was the first time when sustainability topics came up in the market. We then had a financial crisis. Obviously, everyone else had other concerns than to care about sustainabilities. And then the market recovered in 2011, and I then recall that so-called green lease agreements or green property management agreements were the next big thing. I know we had a little specialist group at DLA Piper. We even won an award for this group in 2014, and then we realized in the next 2 or 3 years that this is great to have an award, but we simply didn't make any money with it because it was kind of a nice thing to have, but it was good to talk about, but the investors didn't really take it that seriously. And in particular, just to focus exclusively on sustainability didn't really help that much. So the topic sort of shifted out of everyone's attention, and now to surely Greta, then we just had the Bundestagswahl, the German federal elections. You will know that the German Green Party had a big success, not as great as they had hoped for, but a significant numbers of voters have voted for them. And there's certainly a party which, at least for the E of ESG, did provide for the most sophisticated program. And if you then look at the political parties and think on the one hand about the German rent brake and on the other hand about sustainability, apparently the voters care more about sustainability than they do about the rent brake. So this is driven by regulation. There's the taxonomy rules in Germany, throughout Europe actually. This is driven by investors' appetite. To give you an example, we're advising on a very large logistics company selling a cross-border portfolio in 8 European countries, and this is a sale and lease-back transaction. So we can actually design the lease agreements. And my client actually told me 2 weeks ago, "Oh, by the way, Fabian, we need to include some kind of ESG aspect in the lease agreements." And this is simply because there is a market demand. Investors cannot justify their investments anymore towards their investors if they don't have some ESG component to deal with. But on the other hand, you as a seller are well advised to actually include this if you want to have a marketable portfolio. So at least this is my perception in Europe, but also throughout Germany, of course. Not sure if you see it the same way.
Yeah, I think from an SIOR Europe point of view, we're about to launch a major campaign on sustainability, carbon reduction, and so on over the next few days. And in that respect, we've been working with our partners such as TSL from a general contracting point of view in logistics, and developers such as GLP, who are at the forefront in terms of designing logistics buildings, state-of-the-art logistics buildings that meet the demands of carbon neutral and so on and so forth, looking both at embedded carbon and carbon in use and so on and so forth. And it's to me, it's really, really important that we as real estate professionals work hand in hand with our partners who are out there, be it in the office sector, the logistics sector, and look at how we can respond and think ahead of the if I could get the word out, legislative changes that if we don't act and we don't act together will be imposed. That is for sure. So it's very, very important to get ahead of the game right away throughout and right away across Europe, I think.
Fully agreed. And as a big saying from still Chancellor Angela Merkel, I think ESG is like the internet; it's here to stay. And but there's uncertainty and insecurity by investors, not the big ones, but the smaller, the private investors. They only hear ESG, they hear taxation, but there's no one helping the smaller investors. Earlier this year, I asked one of my employees to create a checklist of any things that you can do for the E in ESG, for the S in ESG, and the G. And it turned out a checklist of 6 pages, both sides printed, and I was shocked of the sheer amount of things you can do if you want to take it seriously. And that's something I'm missing a standard. Maybe it's too early for an ESG taxation standard, but I think in order, as you said, Fabian, selling a Europe-wide portfolio, you set the standard because you're one firm doing all the lease contracts. But in terms of the market, there should be a standard helping investors to cope with these challenges.
Yeah, maybe I will comment as well. I believe there is a strong awareness for long-term holders that regulatory changing and generations who work in real estate is changing as well. So there's more and more younger people who do care about that, and that's an educational effect. So I think, like for example, in Poland, there's a big discrepancy between what's going on in the market. So it's very important for international developers and investors to have this BREEAM certificates, and it's like must-have for prime product. So it's kind of a standard setup already. But obviously we are talking about older projects and smaller investors, smaller projects which don't have this awareness. So there's a big gap between, but it is also reflected in the price then. So I think the market follows the trend and regulate the trend via prices, via standards, and it's coming.
Okay, great. And Alberto, you wanted to pick that up.
Just a detailed question to Fabian. If you corporate sell and lease back, means the existing building should be older 20 years, the building that you trade 20 years. So what kind of exactly reflect in the contract, in the lease contract, ISG rule, is just the cosmetics? Or because the lease back, you usually outsource ordinary and extraordinary maintenance to the tenant. So it creates some obligations in the contract to the tenant to respect actual and future ISG perspectives, or what exactly?
Well, more than you think is about sharing of data, giving access to certain information which identifies certain potential savings of energy within the building. So you have strong data protection rules, and there's no obligation whatsoever the tenant to hand out these data. Other aspects includes the choice of service providers, whether or not you use property manager who comply with certain sustainability standards. Then when it comes to the S and the G, it's certain obligations when it comes to the treatment of your employees and your customers. It's certain compliance obligations we not only see in lease agreements, but we also see in SPAs and purchase contracts that it's not only the seller making certain guarantees or giving certain representations, warranties, but also the buyer needing to warrant that it is and all its affiliated companies in compliance with certain regulations. And this suddenly wasn't around 5 years ago, and it's also a process when, and I have to admit, you gentlemen in the UK a bit more advanced than we are. A lot of people in the United States are more advanced. So when we are advising international investors and they come up with this list of representations, warranties, and the compliance guarantees, and the entire SPA contains 20 pages, and then you have a 5-page list of certain reps and warranties which relates to ESG and compliance topics, it's sometimes somewhat difficult to digest this as a German potential seller. So, but we're getting there. So, and then there's a certain expectance in the markets. Maybe another aspect also, and this goes both ways, is when it comes to development and construction. So in Germany, we have very strong development and construction regulations. We need to comply with certain environmental standards. I'm not sure if they're as strict all over Europe, but also to develop and build in order with certain environmentally friendly standards is certainly a subject where we see increasing contractual regulation, which we haven't done a couple of years ago.
I think just to pick up on that point, I mean, we live in a global world, and whether legislation is there at the moment or businesses are taking note, you've got to take note of what's going on in all of the other countries. And you've got to try and stay ahead of the game. There was a very interesting UN report produced earlier this year, which looked at some of the projected financial impacts on real estate, looking at various aspects of following the ESG agenda, and the executive summary of that report, that finance report, is well worth reading, because it does make you sit up and think about, if certain things happen, this is likely to be the impact of it.
It would be interesting also just to pick up, I mean, we've talked a bit about the logistics market, but I just wonder what people's view is on the future of office, really. Because we've got a discussion about that tomorrow, and I'd be interested to get your views, and I'll bring that to the panel tomorrow as well. But what's your view on that? Because there's obviously been changing views on that actually over the last 12 months, as people felt nobody's ever going to work again in an office, then everybody's going to be back full-time in an office, then people will wear a tie, they won't wear a tie, you know, all kinds of different discussions around it. But what's, I suppose, and this is for anybody, what's your sense of that, your personal sense of that?
I think just from what we're seeing in the market in Dublin, a lot of the larger corporates probably aren't back to full capacity yet. They're doing rotations of staff kind of 2-3 days a week. But what I'm hearing generally is that probably by 1st of January, 1st of February next year, they'll pretty much be back to close on full occupancy. There'll probably a lot more flexibility in terms of a lot of people wouldn't have a specific desk anymore. There's a lot of kind of sharing of space, and you just go in and plug and play in a certain desk, and then you're that's it for that certain day. When you're in the office, all employees want flexibility. Employers, I suppose, have probably bowed to pressure. Flexible working was coming anyway. I think COVID has probably just exasperated and brought it to a head a bit quicker. But I think last year there was definitely a bit of I know in the Irish market, the death knells were been rung on the office market that COVID was going to kill it off altogether, but that just hasn't played out. I think even we're seeing it in terms of traffic and people volume back in Dublin anyway. People are getting back to the office, and people want to be in the office. I think there'll probably be a case that it'll be 3 to 4 days a week, but it's definitely back. I think it's definitely back, and I think it's a good thing.
I think basically the same what Brian just said. People want to meet, people need social interaction, and when you work in an office, when you were used to working in an office, then you want to go back to the office. But I'm sure that the way of office premises will be used, this will change. As Brian said, not a 5-day week, but maybe 3 to 4 days in the office. Friday you work from home. This will change. And I had this idea, you can only be creative when you meet with people. And we as SIOR, we started with an with an online apéro every Thursday in the month, where we met online and everybody had wine, beer, whatever drink in his hands. And when it all started, we had a lot of fun. We talked to each other, we shared ideas. But the longer it took, the longer the year went on, the fewer people participated. And I think this is, although it's only 30 people who participated by max in these meetings, but it's also what happened in the markets, that people, they got tired of working at home, tired of doing video conferences. They want to meet with people. Why are we all here today? Because we want to meet and greet people and maybe hug people as well.
I think that's allowed. I'm not sure what the EXPO version of it is, but
We have a lawyer here.
I observe there are various habits in office practice. So, for example, in our company, people work on hybrid roles, but it depends on culture of the company. Honestly speaking, we observe in our skyscrapers there are companies who the floors are full and the lifts are full, and on the other floors there's no one in the office. So I think it's kind of a culture of the company, and obviously generation is again younger people, they like working virtually, so they are more let's say accustomed to that, when obviously older generation, they prefer to meet and talk, and maybe I'm wrong, we'll see.
Great. There's around 8 minutes to go, so if anybody's got a question either on the online live stream, now is the time to ask it, because there will be drinks in around 8 minutes. I mean, if anybody's got a question here, do just let me know.
You're not encouraging questions when you say there's going to be drinks in 8 minutes.
You think that's off-putting? Do you think that's going to be?
Absolutely, yeah.
Well, in which
no
case,
drinks if there are no questions. That's
well. In which case, we've got 8 minutes, so I'm gonna say, let's look at the opportunities. So where are the opportunities? There are 6 of you, and it'll need at least 2 minutes to wrap up. So that means that's a minute each on the opportunities. So let's start with you, Alberto. In fact, we won't start with you, Alberto. We will start with you, Brian, because I can see that you won't be being seen. That's fine. Brian, let's start with you.
I think the issue in the Irish market is the lack of stock. There's just not. We've a huge number of requirements for investment properties. We just can't get stock. So I think the opportunity is, and I spoke to Tobias on this earlier with my other colleague Robert, is to be creative. I think in terms of trying to look at older properties and properties that mightn't be core properties within the CBD, and say, look, there might be an opportunity here to redevelop or turn to residential, or take element of retail out, reposition it in the market. So I think creativity is going to be key to unlocking opportunities in a market where there's very little stock. That's pretty much what's happening in Ireland anyway at the moment.
Okay.
Well, looking at the German real estate market, and especially the yield levels of the different sectors, with logistics below 3%, office below 2.5%, residential even below 2% for gross initial yield, I don't see much of opportunity there. Of course, it's interesting for institutional investors just to spend money, but it's nothing where you earn money. So I see opportunities in the small cities. That's a good thing about Germany. We have 400 cities with 30,000 inhabitants minimum. And each of these cities, they have their commercial areas, they have their high street. The federal system, or not federal. That's a good thing about Germany, that we have so many cities. And when you go to these cities, of course, the markets are not as liquid as Munich, Frankfurt, Berlin, but you have stable cash flow. And if you're interested in a high, stable cash flow, then go and buy. That's what I do, and that's my missing a word.
It's your day job, Tobias.
The other way around. What I do is I buy small, what I call business park-like buildings with office and then warehouse, up to 5 million euros in these smaller cities. The good thing is there's almost no market, so you can define the pricing. Although the sellers have heard that prices are high in the big cities, so that their expectation starts high. But it takes time to convince them that it's not 20 times for a 30-year-old building, it's maybe 10 times the rent. This takes time, but at some point you can buy it at 10, 12 times the rent. And that's my recommendation for finding opportunities. Go to the small cities.
Okay, right. See you in a minute with opportunities, Renata.
Yeah, I think you cannot be wrong in sheds and beds in Poland because this is very liquid and strong market, and so with long lines of investors waiting for the product. And hearing what yields you are mentioning in Germany, which is next door neighbor, I think there's still room for yield compression in Poland. So I believe these two sectors, value add with development angle, that's probably still good opportunity for larger scale investment.
Okay, great. Paul.
Yeah, I mean, certainly for offices and industrial, I think it's going to be innovations in design and use, which is going to drive the opportunities moving forward. And I think what we're going to see is a much faster pace of innovation. We're going to be driven to change, be it by legislative drive to change or by sheer drive of the pursuing of the ESG agenda. And those businesses that can adapt very quickly are the businesses that are really going to gain the benefits over the next decade.
Okay, super. Fabian.
I'm afraid I have to agree with Tobias a little bit. So what I said earlier about the logistics industry getting more granular and smaller scale investments being the flavor of the day, I think that's where you still do see opportunities. So like your potential own investments you do in these commercial parks up to 5 million, you see these kind of investments also when it comes to offices, smaller office buildings. So not only in B or C locations or B or C cities, but in a level where the private investor doesn't have the money to invest, but the bigger players in the market, they don't find that interesting because it's a lot of transaction management you need to put in there. And basically the pricing range somewhere between 5 and 10 million used to be outside of everyone's radar, and I do see good opportunities there. And maybe when it comes to asset classes, what we haven't talked about is healthcare, child nurseries, kindergartens. You typically have long lease agreements. You have strong tenants, public tenants even. And they're also in the sweet spot of, say, 2 to 8 million typically. And if you buy these and bundle them up and have a portfolio and then sell this portfolio, I'm sure this is a good investment. So if any one of you has 20, 25 million out there you want to hand over to me, I'd say go for it. Yeah.
Are you looking at me? No. Alberto.
Industrial logistics stock in Italy is near 500 million. 60% of these square meter is in the north of Italy, mainly Milan, Padua, Turin, Padua, Milan, and Bologna. 20% of the stock is logistics, which is speed of the light between users, developer, and investors. And 80% of the stock is manufacture. No one scares manufacture. It's just end user game. There's no development, no investors, and I will bet in that asset class.
Okay, perfect. Very good. I like that. We have exactly 30 seconds left. So thank you very much. Really interesting discussion. Thank you for joining us.